The Rolex bubble has well and truly burst. In this video, we're going to have a look at the price charts and all of the different charts in between as to why this happened and if there can be a turnaround and when this could come back and we see these crazy secondary prices. So what we're going to do first is have a look at watch charts. Now, this is almost like an index of watch charts and what has happened. Now, what we can see here is we do have this crazy all-time high in secondary market of Rolexes and then this cool off period right here. Now, what I will say is that this chart is an index, so it's taking into account 30 different watches and taking their averages and their prices to get this chart. So this is somewhat of an accurate representation about what is happening on the secondary market when it comes to Rolex, but it's not going to be dollar accurate because obviously there can be private sales, dealer sales, things like that, but this gives you an idea of the market as a whole. Hey, real quick, if you are enjoying this video, go down there, hit that subscribe button. I'd really appreciate it. Now, what we can actually see here is that where it really kicked off and started was around this June 2020, and this was around the time of the pandemic, and we can see the price running up to around March in 2022. So what I actually wanted to show you is this is the interest rate chart. Now, this is a very good correlation about what has happened with Rolex prices and the cheap available money that's on the market. Now, we're just looking at US interest rates. This will be different for different economies, but the US interest rates are almost like the driving factor when it comes down to what's actually happening. So what I have put out here is when we saw everything kick off, and here is the all-time high. Now, what you can notice here is that it took about 3 months of really cheap interest rates for people to realize that they've got a bit of extra money to spend. It means that they can then loan, leverage, play more in the stock market, all of that kind of stuff. So they were able to actually run it up. And what you can notice here is that when interest rates didn't move at all and they stayed at record lows, we ended up with a period of Rolex just skyrocketing up. So this period right here that I'm drawing up is this period right here, this run up from there to there. So that is as straight as a line as you can get when it comes down to looking at price charts, secondary markets, things like that. So what is crazy is that with record low interest rates, people had more money to spend, people were able to take out loans, people were able to play and leverage a little bit, which then meant that you had these crazy prices that run up because money was very cheap. Now, when we actually have a look at the interest rates and what actually happened when they kicked in, and it's almost to the point. This month right here, when interest rates first went up, people realized that the game was over, that money is going to cost a lot more to borrow, and that is where we end up with this point here. Almost to the date, we had the market cooling off and going down. Now, the way that I look at this, the way that I analyze this, is people realize that, hey, interest rates are going to go up, things are going to get more expensive. Have I made some money? Am I what are the flips looking like? Does it make sense to pay this much above retail? Will the price go up much higher? No one's got money. Interest rate's going to kick in, so we need to be very careful and start leveraging out. And then what ends up happening, so layering out, then what happens is we start to get this price down. Now, another key point that I want to kind of touch on, and this almost reinforces that point when it comes to interest rates, is if we have a look at this part here where it sits flat for around 6 months on the secondary market. What you'll actually notice here is we've got this 6-month mark right here. This is the plateau section. Now, this plateau section is when interest rates started to drop, go up less aggressively. We had them go in these crazy basis points, apart from this little blip here, basis points. Then it started to actually kind of taper off, and people kind of thought, okay, this is where we're at. The Fed's tapering off rates, we will get the soft landing, all of that kind of stuff, which then meant that there was a little bit of confidence back in the market in this current point in time. So then what happened is when rates they pause for a little bit, and then once they head up, so again, once we hit this little month here, what do we get? This is where we have this point right here, and it starts to trend back down. So what you can see is interest rates almost have a direct correlation to what is happening on the Rolex secondary market and actually picking up a fine timepiece on the gray market. And this is not going for the sort of retail market, sort of MSRP, because no one can really get Rolexes at MSRP. So what this is showing me is that when the Fed does eventually cut interest rates, that's when we could see a little bit more confidence swing back into the market. So if I was playing the market, if I was buying, selling, flipping, if that's what I was doing, if I was in that game, I would be looking at what the Fed does with the rates, because these rates are almost the indicator of what's actually what is going on in the Rolex market. Now, something that I also wanted to point out is the cryptocurrency market as well. Now, the reason being is a lot of money was in the cryptocurrency market, and you see on forums like Reddit, you see places on TikTok, everywhere, that you have crypto boys that will end up kind of using that money to then buy Rolexes and stuff. And I wouldn't say it necessarily correlates. So right here, this is where it kicked off, and sure, that did coincide with everything running up, but this could also be coinciding with the fact that interest rates were cut, so people wanted to actually get a better return instead of just holding cash. But what you'll notice is that there was an all-time high in cryptocurrency at around that stage, and that stage was at around November 2021, so November, December, just the end of 2021, and the Rolex bubble actually kind of burst closer to March, which is around 3 months after the top of that crypto cycle. So there could be a little bit of correlation, but I don't think the cryptocurrency market is where a lot of the liquidity was coming in. I think this was actually coming, it closely corresponds with the interest rate chart and how things are. But the reason that I wanted to bring up the cryptocurrency market is I wanted to try to find different parts, different aspects to then bring you a more informed decision and more rounded view about what's actually happening in the market itself, why it could have burst and when it could turn around. And almost excluding some is a better option than just showing you the one point that it does match. So hopefully you like that breakdown, a little bit of look at the markets, where it can go, how it can change. If you found value in this video, if you like this video, make sure you go down there, hit that subscribe button, and also hit that like button. As always, it's been a pleasure having you with me. Until next time.